You're about to miss the biggest opportunity life has ever given you. And the only reason you're even hearing about it this early is because we live in the social media era, where knowledge that used to take years to spread now explodes in a single day through one viral video. Normal people like you and me would never get access to a life-changing opportunity this soon. But here you are, watching this right now. And if you miss what's about to happen, it's on you. Nobody else. Just you. In the last 72 hours, gold smashed through 5,000 an ounce for the first time in human history. But here's what nobody's telling you. This isn't just another price spike. This is the beginning of a fundamental shift that's going to make the 2008 financial crisis look like a rehearsal. And while the talking heads on CNBC are still debating whether gold is a good inflation hedge, $7.7 trillion is quietly sitting in money market funds ready to flood into this market the moment panic sets in. Stick around, because in this video, I'm going to show you exactly why this is happening, why it can't be stopped, and the 3 specific moves you need to make before this window closes. And by the way, I'm not some Wall Street suit. I spent the last decade analyzing precious metal cycles, and I've never seen a setup this perfect. But first, let me prove to you why this isn't normal. Have you noticed the news lately? Not the gold headlines, the other stuff. Japan's bond yields suddenly spiking because a politician named Sanae Taikichi wants to print money like it's 1970s America. Europe's energy crisis reigniting, and Trump openly talking about firing the Fed chairman if he doesn't cut rates. Most people see these as separate stories. I see one story: the total collapse of trust in fiat money. The U.S. Economic Policy Uncertainty Index just hit record highs. That's not a number that goes viral on TikTok, but it should, because it's the exact same indicator that predicted gold's 1980 peak at $850, which, adjusted for inflation, was over $3,000 in today's dollars. We just left that in the dust. Here's what the mainstream media is getting deliberately wrong. They're calling this a flight to safety. That's kindergarten-level analysis. This isn't fear. This is math. There are $7.7 trillion parked in money market funds right now earning 4 to 5% interest, but Trump wants rates at 1%. Do you know what happens when that $7.7 trillion can only earn 1%? It looks for a new home in the only politically neutral, inflation-proof, central bank-free asset on the planet is gold. But wait, didn't Bitcoin promise to be digital gold? Yeah, about that. The moment Trump announced plans to make America the crypto capital of the world, Bitcoin stopped being neutral. It became a political asset. When Jerome Powell sneezes, Bitcoin catches a cold. When Trump tweets, Bitcoin trembles. Gold? Gold doesn't have a Twitter account. Gold doesn't care. That's why volatility in Bitcoin is collapsing, while gold volatility just hit its highest level since 2020. The smart money is rotating out of crypto and into something that can't be regulated with an executive order. And here's where it gets terrifying and profitable. The last time we saw this setup was 1976 to 1980. Fed Chairman Arthur Burns caved to political pressure, kept rates too low, and created stagflation. Gold went from $100 to $850. That record held for 45 years. We're not just breaking that record, we're obliterating it. The rally over the last 12 months is 83%. In the 1970s, that took 4 years. But here's what nobody's calculating. The retail investor hasn't even shown up yet. Ask your neighbors if they own gold. Ask your coworkers. 95% of them don't. When gold was at $2,000 in 2020, it was a niche story. At $3,000 in 2023, only hardcore stackers cared. At $5,000, now it's on the homepage of every financial site. But the masses are still frozen. They're waiting for a pullback. They're waiting for confirmation. They're waiting for permission from Jim Cramer. That hesitation is your edge. Because when, not if, gold hits $5,400 in the next quarter, which is the conservative target based on this technical breakout, the retail FOMO will begin. And when that $7.7 trillion in money market funds starts moving, it won't trickle in. It will be a tsunami. The same tsunami that pushed the S&P 500 to absurd valuations will do the same to gold. But here's the difference. Gold is a tiny market. It doesn't take much money to move it 100, 200, 500 in a single day. So what do? Let me break down the exact 3 moves I'm making, and you can copy them or adapt them to your risk level. Move 1. Get liquid exposure. Don't buy physical coins. I know. If you don't hold it, you don't own it. That's a nice slogan, but coins have 5 to 10% premiums, storage costs, and you can't sell them in 30 seconds when you need cash. Instead, look at ETFs like SGOL or PHYS that are 100% backed by physical gold but trade like stocks. You get the same exposure, zero counterparty risk, and you can dump it in one click. Move 2. Sell covered calls. This is how you get paid to wait. Let's say you buy 100 shares of GLD at $195. You immediately sell a call option at $200 that expires in 30 days. You collect $300 in premium instantly. If gold rallies, you get called away at $200 and keep the premium plus the $500 gain. If gold dips, you keep the premium and lower your cost basis. In volatile markets like this, I'm collecting 2 to 3% per month in premiums. That's 24 to 36% annualized returns just from options, plus the gold appreciation. Move 3. Junior miner leverage. This is the high-risk, high-reward play. When gold moves, major miners like Newmont move 1.5x, but junior miners, the small exploration companies, move 5x, 10x, sometimes 20x. You don't need to gamble on one. Buy the GDXJ ETF for exposure to 50 different junior miners. If gold goes to 5,400, that ETF won't just go up 10%, it could double. And if you time it with a covered call strategy, you're looking at triple-digit returns, while everyone else is bragging about their 8% savings account. But here's the thing. Most people watching this will do nothing. They'll bookmark it, they'll think about it, they'll wait for the next video to give them more information. And that's exactly why opportunities like this exist. The market rewards action and punishes hesitation. Let me be blunt. I've been in the gold space for 10 years. Every rally, every dip, every manipulation, and I've never seen a confluence of events this perfect. You have geopolitical chaos, a Federal Reserve that's lost its independence, a sitting president who openly wants a weaker dollar, $7.7 trillion in dry powder, and retail investors who are still asleep. This is the setup that creates generational wealth, not in 5 years, not in 3 years, in the next 12 to 18 months. But the window is closing, algorithmically, yes, but also psychologically. Every day that gold stays above 5,000, more newsletters get written, more CNBC segments get aired, more TikToks go viral, and more of that $7.7 trillion starts moving. The first 10% of that money will push gold to 5,400. The next 10% will push it to 6,000. And by the time the last 10% is trying to get in, you'll be selling to them at 7,500, wondering why they didn't watch this video when they had the chance. So here's my challenge to you. Pause this video, open your brokerage app, spend $100 on SGOL if that's all you can afford, or $500 or $5,000, but make the move. Close the gap between knowing and doing, because knowledge without action is just entertainment. And if you're serious about this, if you want to build a portfolio that survives whatever comes next, then start documenting your journey. Create a Twitter thread, start a newsletter, make a video showing your first gold purchase. The attention economy around precious metals is about to explode, and the early creators will have audiences of thousands of people desperate for guidance. You could monetize that with affiliate links to dealers, courses on technical analysis, or a paid Discord community. One of my students turned a $2,000 gold position into an $8,000 a month education business in 6 months. The opportunity isn't just in the metal, it's in the movement. Think about where you want to be in 12 months. Do you want to be the person saying, I wish I'd bought gold at 5,000? Or do you want to be the person looking at your portfolio, seeing green while everything else is red, knowing you had the conviction to act when it mattered? The choice is yours, but make it now. If you found this valuable, comment below with the word gold and the price you're starting at. I read every comment and I want to see who's taking action. And if you want to see my exact portfolio positions in real time, including the covered call premiums I'm collecting, subscribe and hit the notification bell, because I'm documenting every trade. Your financial breakthrough isn't 5 years away, it's one decision away. Don't let this be another opportunity you watch from the sidelines. Now, if you want to understand why silver could actually outperform gold by 3x in this cycle, subscribe and hit the like button, because my next video will make you a millionaire if you apply it.